Look, we've had a lot of data mixed throughout the month of June. Now we've got the July numbers pretty much in line with expectations there, softening on manufacturing at the bigger and state-owned firms, but still it does look encouraging on the supply side. And we got the Politburo memo out yesterday, which the markets seem to be somewhat apathetic towards. What's your thoughts on this? Why?
No, I think the market was definitely viewed it as an apathetic read, and I feel that not only from the plenum but also from the Politburo notice that the market was really hoping for some level of a bazooka to come into to aid the stimulus that we've seen throughout the rest of the year. And really, we're in sort of Groundhog Day again. We just seem to be grinding into this sort of narrow range, mid-hit on relatively low volumes, and the market looking for some level of catalyst to be able to push it forward. So I think the market viewed it as probably disappointing yesterday. Interesting to note that the ADR is still starting to trade premium, so it still feels that from a global investor point of view, people are still tiptoeing around the Chinese market. But overall, we really need to see some level of conviction coming from Beijing in terms of real active stimulus, and we seem to be somewhat frozen at the moment.
Yes, for now, it seems that with this sort of two-track recovery we're seeing, as I said, encouraging on the supply side, not so much on the demand side, even though there seems to be some more supportive tone coming through from the authorities on consumption. The folks over at Macquarie have suggested that perhaps the way to play this macro environment is that positive for bonds, not so much for equities or CNY. Do you believe that that is the way to play it now moving forward?
Yeah, to a degree, and definitely for the immediate short term. And again, I don't think we've really changed our stance here of being, cautiously defensive when it comes to Chinese equities. I mean, we still have, systemic issues that come along with the Chinese economy, although we're seeing some signs of life, as you said. And I think from guidance from earnings that have come out from onshore corporates, there's still a lot of difficulties and a lot of hurdles to jump over. So we still, overall, medium term, we're still bullish for the market, and we still believe that the market will rebound to levels. But, alongside the geopolitics, alongside the presidential elections and what's going on there in terms of how that's going to affect the China market, we would still be cautious. Still look to play some of the consumer names, still look to play some of the e-com names, but again, you've got to be very, very selective and very, very careful.